Howdy there, folks. A lot to discuss in today's video. I have a lot to take you through, a lot of things to show you, some very important things, a lot of stocks to talk about, obviously, that are making some insane moves here, and a lot to speak about, okay? First off, and by the way, I appreciate everybody that subscribed to the channel. Thanks for being here, folks. Something very disappointing I obviously got to see last night, essentially, right? And it is the fact that basically retail has dumped out of this market en masse, and they're gone now at this point in time. And if you want any proof of this, right, like there's a million proof points I could show you for this, but if you go ahead and take a peek at Robinhood monthly active users declined for 6 straight quarter. Retail has basically said, peace out. We are out of this market. We're done with the stock market now at this point in time, right? If you go ahead and you look at all their numbers, revenue, super disappointing. They lost more money, but this is the most important one I look at. Monthly active users, 11.4 million monthly active users versus 12.2 million. During Rona, Robinhood rode the retail trading boom as younger class of investors flocked to the stock market and obviously crypto as well, right? And monthly active users grew north of 21 million at the peak of early 2021, right? Well, it's 2 years later now, and basically everybody has dipped out of this market. This is Robinhood's monthly active users decline from over 21 million. So basically 10 million people have said, at least 10 million people, right? Because not everybody uses Robinhood, but let's just be honest. Let's tell the truth, okay? The truth is, most new investors that get in the market use Robinhood, far majority of them, okay? And so we've basically gone back to where we were prior to Rona now at this point in time, right? In terms of investors that are using Robinhood, right? Which is, once again, is like the biggest service out there, right? Personally, I use Fidelity Investments, and a lot of higher net worth folks definitely use, other platforms, whether it be TD Ameritrade, Fidelity, things like that, right? But the bottom line is, in terms of all the newbie investors, like almost everybody signs up for Robinhood. This is the biggest. They continue to be the biggest, but their numbers are down significantly. Okay, and so this shows you that retail said bye. We're out. We don't care about the stocks anymore. We don't care about the market. And it's sad. It's really, really sad. But damn it, this happens in every market. There's never been a market where this hasn't happened in the past. This happened in the tech bubble, when the tech bubble wouldn't pop in 2001, 2002, and it actually started in 2000. Right? This happened in the Great Financial Crisis, and here we are in the 2020s now at this point in time, and it's just happened again. And it's just so disappointing because, these folks, they got in the market in the biggest FOMO time. They ran to the market, and, here we are in this big bear market now, right, where NASDAQ went from 16,000 plus to, in 2022, the NASDAQ was in the tens. It was in the tens, right? And, there's going to be so much money to be made over this next 3, 5, 7 years, and so many opportunities and so many stocks to pick up for very, very cheap prices. And unfortunately, retail's not going to be there to pick them up. And it's sad. It happens every time, man. It never fails. And you will see, again, another epic blow off the top bull cycle. It won't be for a long time for now, but there will be another one of those situations again. And it's unfortunate, man, because it happens time and time again out there. Now, if you're wondering why the market's starting to weaken recently, okay, this has been going around out here, okay? Jim Cramer on why the market likely won't see a sustained bottom anytime soon. And that video came out October 11th, 2022. And over here, afternoon update, here's why Jim Cramer says this market rally will not last, right there. And then Jim Cramer says the economy is headed for a soft landing. Everybody's losing their jobs, okay? We're all going unemployed at this point in time, man. Oh, boy. Anyways, a little fun in there, right? But in regards to market, right? Another Red Dead Redemption day out there here today. Russell down 1.4%. The NASDAQ down over 1%. S&P 500 down 0.88% here today. Definitely a little pullback there, and we'll talk a little more in depth about that in just a moment, okay? Google McDougal stock getting absolutely decimated. This is just since their whole debacle situation happened with the AI yesterday. Stock's gone down almost 12%. Just since that, let's call it wrong answer that their AI gave, right? That's incredible. That's incredible. In my opinion, what's actually going on here, right? And the stock market is a little bit similar to a magician. It gets you to kind of look over here when really you should be looking over here, right? And so here's my opinion on this. Wall Street's been looking for a reason to really dump Google a lot harder, okay? And I think they want to probably continue to dump this stock. It's definitely a possibility, okay? And my belief is They're using this AI as a reason to dump the stock. But really the reason they really want to dump Google stock is actually has nothing to do with the ad market right now or TikTok or Instagram Reels or artificial intelligence or any of that, to be quite frank. The real reason is the whole government situation, where the government's really looking into them very heavily. And so that's my opinion on that. And I think they're looking at this as very similar to how they looked at Meta, where they're kind of like, this is a no-touch stock right now, and probably will be for the next few years. And so don't be surprised if Google just kind of struggles over this next few years. Not in terms of their numbers. I think they can still report very good numbers. But if you're expecting, Google stock price to do what it used to do back in the day with this whole government situation, it's going to be tough sledding. It's going to be tough sledding, and I think a lot of Wall Street's going to bypass Google, and they're going to buy other big techs out there. And that's exactly what we're already starting to see play out. And so that makes it a tough dynamic, right? And so in terms of Google, it's a buy if you're a long-term investor, but just don't expect these bad news, these sell-offs to end anytime soon. Like, they'll use any excuse to dump shares of Google right now because of the government situation. That's my personal opinion on this, okay? Now, Amazon just crossed under $100 a share. Anytime Amazon goes under 100, that's a strong buy territory. I will likely be a buyer of Amazon stock tomorrow. It's just a question of how much Amazon do I buy tomorrow, but I will likely be a buyer. There's tremendous opportunity in this stock. On the government side, they're looking pretty good as of right now. You never know when something can creep up, but they're looking pretty darn good right now. And in terms of just their business, their net income, their EPS is going to take off like a rocket ship over this next couple of years here, regardless of what happens in the economy. So I think Amazon's going to be in a really, really good spot, and they're troughing as we speak right now in terms of their actual business. So definitely looking to pick up more there. Now, in terms of a couple stocks here, Tesla, another one, right? Another great day for Tesla. The market's all Red Dead Redemption out there today. And this stock just continues to report good earnings. By the way, Wynn, it was my best stock here today, okay? Let me tell you what Wynn said on the conference call, okay? Something very important, by the way, Alpha, another green day. That stock is just amazing, right? Wynn was my best stock here today. So I listened to their conference call about 2 a.m. last night, okay? And what Wynn said on the conference call was a couple important things, two very important things, okay? One is U.S.-based, one is in China. In terms of China, which just matters in a significant way for Wynn in terms of their Macau business, okay? What Wynn said is in China, business is insanely strong, basically. That was what they basically said. But it's still so early that they can't get too excited. They'll have a lot more information to share with us next quarter. But in terms of Macau, in terms of the China opening phase, we're still very early days there. But they basically said, it's even beating their expectations. Like, very, very good, okay? That's great news. That's great news, okay? The second component of this, United States business. Obviously, if you don't know, Wynn has 3 properties in the United States. One's the Wynn, that's on the Las Vegas Strip. The other's Encore, which is on the Las Vegas Strip. And the other is Encore Boston Harbor, okay? What they said with their USA business is they said it's still incredibly strong. And despite all the macroeconomic concerns and those sorts of things, their business in the States is incredibly strong. Bookings looking very strong, high room rates, high occupancy, all those things. So, that's good news, okay? Because obviously if you're thinking about any sort of recessionary environment, usually business wouldn't be that strong. But they basically say, business looks great. In terms of our bookings, what's coming down the pipeline, like everything's good. So that's great news, okay? And we also heard a very similar sentiment yesterday from Uber CEO, Dara, right? Dara basically said he's seeing no weakness in the consumer as well. So I think those are just important factors to take into account, right? Because it's a very confusing time right now. People are seeing this and seeing that, and they're like, is the economy, getting really bad? Is it getting better? Is it not getting better? Is it stagnant? Are we in stagflation? Are we in recession? Are we in still expansion? And it's very confusing. So I think it pays to listen to a lot of conference calls, not just from the investment standpoint, but just to understand what's going on with a lot of the biggest companies in the world and how they run their businesses and how are their businesses shaping up right now, right? In terms of Alpha and Tesla, these stocks are bailing out the public count over these past week or so, right? A lot of weakness in the market, a lot of red, but these stocks just continue to show strength day after day after day. Alpha just crossed a 900% gain. A 900% gain. And this is during a very weak market, obviously, right? That's incredible that this stock is doing that, but The thing I always told you guys about Elf, right, is their products very low cost. And if consumers tighter on cash, if you're talking about what brand has the best reputation and low price points to be able to folks to be able to afford it, it's Elf. And yet their margins are incredible at that company. So I just couldn't be happier with that. And then in terms of Tesla, I mean, there's a lot going on here. There's a lot of excitement really around the upcoming March 1st investor day as far as that goes, right? And there are a lot of people really piling into call options in regards to Tesla. If this market starts to go green, Tesla will be 250 before you know it. 250 before you know it, if this market really turns green. Because look at the days it's having on red days. I mean, market goes down and down and down, and yet Tesla's just banging out another green day. I mean, that's $10,000 today. $10,000 to me today, just on these Tesla shares here in this account, right? It's just strength after strength after strength, right? Now, in terms of not strength, and I appreciate Brenton, I believe, posted this inside the private stock group in the breaking news tab, right? You just see layoffs everywhere, right? Baxter International, 5% layoff. GitLab, 7% of their workforce. St. Luke's, 2% layoff. Zoom, 1,300 employees, layoffs, right? eBay slashing 500 workers there. Canopy, how are they still around? Oh gosh, how are they still around? They're cutting employees. So here's the issue. Here's a big issue, okay? It's a very uncomfortable buying environment for us investors. Because what we're looking at right now, by the way, I never put my light on there. Oh, wow. Ooh, boy, I'm all lit up now, okay? The issue for us investors right now is you look out there at the market, right? And you're like, oh gosh, this company announces layoffs, this company announces layoffs. It's an extremely uncomfortable market to be a buyer in. Extremely uncomfortable, right? And you got to understand, in this environment, you just have to tough it out. And you have to be a buyer when, unfortunately, you see a lot of bad news. It's much easier to be a buyer when you're seeing like, oh, this company's adding 10,000 jobs. And, oh, this company just said they're going to add 5,000 jobs. It's a very tough environment to buy in when you're hearing about this company's cutting 5% of their workforce. And this company's cutting 7% and 2%, 4% and 10%, right? It's extremely uncomfortable. I understand it. But just understand, that's where the biggest money's always made. It's always been that way. When you're seeing those job cuts, when you're seeing the layoffs, all that stuff, that's always the best market to be a buyer in. It's just factual. Like, go back throughout history and you'll find it time and time again. Look at the last many decades, right? And so those usually present you with some extraordinary opportunities, including if you look at the great financial crisis, if you look at obviously the crash of 2020. I mean, it's not comfortable. I can tell you that when you're seeing this company cut, this company cut, this company cut. But at the end of the day, you have to be a buyer, right? Now, in terms of unemployment rate, you're seeing all these cuts, and yet you're seeing government data showing that unemployment rates basically at all-time lows. And this is creating a lot of confusion because you're looking at the headlines, you're like, how are all these companies cutting all these employees? And yet unemployment's like the lowest it's ever been in history? Like, how's that even possible, right? And that's definitely confusing. Very, very confusing. Very confusing, right? The one thing I'll tell you this, okay? Government data always lags, and it lags big time, okay? I can tell you, I thought there was way more inflation in 2021 than what CPI was showing, what the government numbers were showing, okay? I was like, I'm seeing crazy inflation in 2021, and yet the numbers weren't that crazy, right? And then in 2022, it hit, and obviously the numbers started to pour in, right? And so don't be surprised if in a few months from now, you start to actually see the unemployment rate tick up, okay? And you start to see it go up and up and up and up and up, okay? And so just keep in mind this government data lags. It lags, man. It lags. It lags sometimes months, many, many months. And so once again, do not be surprised if, starting in March, April, May, throughout the summer, you see this unemployment rate start to tick up more and more and more and more and more. And then the news will go to, oh, wow, unemployment's starting to go up, right? Which is kind of the last leg you're really looking for this market, right? You've seen the economy slow down. You've seen corporate earnings really come in. You've seen a lot of very cautionary commentary from CEOs, a lot of confusion, right? But the last thing you really need, the last thing to really end this vicious kind of cycle we've been in for the last, year and a half or whatever, right? The last thing you really need is you got to have unemployment tick up. And that's something that the Fed's really talked about. They've been fairly consistent that they've expected, unemployment to go to 4 to 5%, somewhere in there roughly, right? And so don't be surprised if you see that eventually as the year ticks on here. Now, the interesting dynamic for the market is, right, you might think, well, if unemployment goes up, that has to be bad news for, companies, right? It has to be bad news for the stock market. It means the stock market is going to go lower. It doesn't really work like that as perfect as you might think, because if unemployment starts to tick up, and especially if it starts to do it significantly throughout the springtime, summertime, and you start to see that unemployment rate start to climb quite a bit, right? Well, guess what's more likely? You're much more likely to have the Fed start to cut rates, because we're in a dynamic where inflation's clearly starting to fall, right? And we're likely, if we were to see real-time numbers, we're probably at something like a 5%, somewhere in the fives right now, right? And we're likely on the way to 4s and 3s. And so if you're in that sort of dynamic, well, if inflation's falling and unemployment's going up, the Fed has two goals, right? It's to have price stability, and it's to obviously have maximum unemployment, right? And so if unemployment rate all of a sudden starts to tick up and inflation's coming down and down and down, and let's say Fed funds rate is, close to 5% at that time, which is very much it could be, well, that's a moment where the Fed starts to actually cut rates, right? Which is another thing some market participants are looking at as when they start to cut rates, buy, extra buy, right? And that's just some folks' opinion out there. I'm a very consistent buyer out there, but that's some folks believe that when they're cutting, you got to be buying like crazy, right? Now, one of the issues is services inflation, okay? And I'll just give you a couple real life examples of services inflation, because this is something, if you hear what Jerome Powell's talking about, if you hear what the Federal Reserve's talking about, they keep talking about services inflation is where we still have problems. Goods inflation's come down, that's great, but we still have a lot of services inflation, okay? And I got to say, I've seen some of this in the real world, okay? So I got some landscaping done recently, okay? Keep in mind, this house is relatively new, right? And so my bushes are like teeny little tiny things, right? My wife called and got landscaping done. These took these guys less than an hour, okay? It took them less than an hour to do this, 2 guys. You know how much they charge for that? $180. $180, man. It's like $90 an hour for each of them, right? To do some flip and flapjack and little landscaping, you say, well, they might have spent a little gas using their blower, or using their little trimmers or whatever. Come on, man. What are they going to use, $5-10 worth there? Give me a break. It's not even going to be close to that much, right? At the end of the day, those guys made like $80 to $90 an hour, basically, for doing my yard. And it's like, geez, man, I'm thinking I'm going to become a landscaper, leave YouTube. It sounds like a pretty dang good amount of money to be making doing just landscaping, right? Give you another example. I went on vacation last month, and I don't get to take a real vacation like that where I totally unplug, other than maybe like once a year, right? And I went with my wife, and, the place we stayed at, La Casa de la Playa, right? I just called him up and, told him I just wanted like a massage, right? So 90-minute massage, a couple's massage. I figured, it's a high-end place, obviously. I figured maybe $400, $500 for this couple's massage. This thing was $700. I didn't know. I didn't ask the price or whatever. I told him just book it. I'm like, geez, man, $700? Okay, all right. That was cool. 90 minutes. $700 later. Wow. Okay. And that just goes to show you the services inflation that still is out there right now, where, anything that this all falls into services, right? All this stuff, or whether you're talking about getting a massage, or whether you're talking about landscaping, or getting your house cleaned, or anything like that, right? Going to a restaurant, all this stuff kind of fits in that services category. And that's where we're still seeing this high inflation. And the real problem is unemployment's been so low. So if you get a higher unemployment rate, then you have more competition for the services field, right? And for all these, whether it be the person that works at the restaurant, or whether it be the person that does landscaping, or whether it be the person that cleans a house or cleans a pool or whatever, when unemployment goes up, people go to those sorts of services type jobs, right? And then you start to see potentially even deflation, because people start to undercut other folks' prices on that, right? No different than back when I had my real estate marketing company, right? Photography, videography, all those sorts of things for real estate. Back when I started that business, that was my first successful business I ever started, right? This was I started that at the end of 2015. What did I do? I came into that field and I undercut everybody. I undercut everybody's price, and I built a very impressive clientele list of some of the best realtors in all of Las Vegas in less than a year. But I undercut everybody's price, right? So if anything, I caused services deflation in that market, because, I came in there and I was just out competing folks for lower price. And so this is just something to keep in mind. But when you have unemployment so low, people have all these jobs, all these other places, then the people that are in the services can just get, top dollar for all this. And it's like, oh, go somewhere else, so you're going to pay just as much, if not more, right? So that's the situation we have at this point in time that is still the sticky part But believe me, once unemployment starts to climb in any significant way, that's when you start to see all the services inflation stop almost immediately, because then people got to do something to make a buck, right? And so they go to these other fields that ultimately you don't need, crazy levels of expertise, right? Like my 8-year-old could do landscaping. It's not rocket science, right? NASDAQ. So in terms of the NASDAQ, a lot of people are trying to figure out, obviously we're having this recent pullback here. I think it's been about a 3-4% pullback in the NASDAQ so far. Recently, just in the past, I don't know, maybe a week or so. And so a lot of people are looking at the market and like, okay, are we about to have this another big, huge downward move here? Boom, into a new lower low. Because that's what we've seen consistently in this market, right? Every single time you've gotten one of these rallies, it ended up in a lower low, basically. Rally there, boom, to a lower low, rally there, almost to a lower low. We didn't quite hit a lower low there, right? And now we had this recent high, and people are like, maybe we're just going back to a lower low. So that's what people are thinking now at this point in time, right? And in terms of that thought process, right? First off, I don't think anybody really truly knows if that's what's going to happen, right? But you're going to need, if you're going to talk about going back down to a lower low, you're going to need some really shockingly bad stuff to happen. Now, what could happen that could be shockingly bad, right? Well, a CPI number comes in way hotter than expected. That could cause shock and awe in the market, because that could also put the Fed into a situation where instead of raising 25 basis points, they go back to raising 50 basis points, or dare I say 75 basis points again if CPI came in too hot, right? And that would obviously cause panic in the market from the long side, right? And a lot of the people that have been buying recently might end up selling in that sort of situation if you had a red hot CPI and everybody became convinced that, oh my gosh, the Fed's going to have to raise 50 or 75 basis points next time. Because now everybody's thinking Fed's going to raise 25 basis points maybe once or maybe twice for the rest of this year, and then that's it. And that's it. And so if you also talk about it's going to be much more substantial than that, that's obviously something that could freak people out. And maybe you get that NASDAQ back down to the 10,000 range, right? Which would be vicious, a vicious fall. And obviously you get tremendous opportunities in the market. It depends on what side of vicious you're on, right? If you're just thinking about what your portfolio says in the short term, it's vicious. If you're thinking about the best opportunities to buy stocks you could possibly imagine, you should almost, root for CPI. Come in hot, baby, come in hot, because there'd be obviously a tremendous opportunity. You could be getting Amazon at $80, right? You'd be getting Google at $80. You could be getting, Tesla. I don't want to say Tesla because Tesla's its own animal. Okay, that might still be up even in a down market. You could get Apple at 120, 125, right? You get just a lot of opportunities. You get Microsoft at 220, 210. You could get Meta at 150, 140. If you're dreaming about $80 again, that ain't happening. Okay, in regards to Meta. So dream on about that. Now, in regards to the market, right? If you look at over time, and I just pulled up kind of like 2013, 2015 kind of time, or to 2018 type time frame, right? You always had to take advantage of every dip you get, right? And in that market, you had to work with urgency. You had to work with urgency, man. Because if you weren't taking advantage of these dips, where they lasted a few weeks or a few months, then you got left behind, right? The problem with the current market we're in the chart I just showed you, is it tends to make people not have a sense of urgency, okay? Because they're kind of like, well, the market's not really moving that much right now, so I don't know, do I really need to buy? Maybe next year I'll buy, or the year after, or 10 years from now, or whatever, right? I can just tell you in the market, you've got to work with a sense of urgency all the time, man. You've got to work with a sense of urgency. You've got to always be a buyer out there in the market. If you can't buy every week, you got to at least be buying every month. You've got to have a sense of urgency in this market. I'm telling you, these markets can make people very complacent. The bear markets, the downtrending markets, they make people very complacent. And they'll see these opportunities right in front of their face that you never could have imagined. Whoever could have imagined getting Tesla that was $400 plus a share for $100 a share? You got that opportunity last month, right? In December as well, right? Who could have ever imagined Meta that was $300 plus? You'd get those shares at $88 a share. And a lot of people didn't take advantage and they didn't buy, right? And now they're left watching those stocks go up and up and up and up and up, right? And yeah, they'll have pullbacks here and there for a few weeks or a few months, but at the end of the day, they're just going higher over this next several years, right? And you had people that just got very complacent in the market. And so the thing I can say to you folks that are in the market, right? Because obviously there's a huge group that obviously left and said, peace out to the stock market, we're done with you forever, right? But for the people that are left, and I appreciate all you that enjoy this and you're in this for the next 5, 10, 15, 20 years, right? You've got to work with urgency in the market. Got to work with urgency. Stay away from things like margin. Stay away from things like playing short-term options and stuff like that and taking unnecessary risk in the market. But you've got to work with urgency in this market, folks. And if you don't, you will be left behind, okay? And so that's why I always take advantage of these dips. And, you know, when Meta fell to, what was it, under $100 or whatever, like, look at how much I was buying. That might have been my heaviest buy I did of all of 2022, right? I bought like $77,000 of Meta in like one day, right? Work with urgency. When you see the crazy opportunities that you're like, I can't believe this stock is trading, you've got to work with urgency out there and continue to pick up shares at very cheap prices, okay? And you don't have tomorrow to wait, man. This is one life, and you get one opportunity, and you've got to take advantage. You've got to work with a sense of urgency, okay, across everything. If you don't, you will be left behind, and you will be the one that looks in the future like, oh, remember when that stock was that price? Oh, remember when that stock was that price? Why didn't I buy? Oh, why did I buy so little? Oh, why did I wait, right? You got to work with a sense of urgency. The market you don't want to work with a sense of urgency is in when everything's at all-time highs, when Robinhood's got 20+ million users using it, right? That's a time you don't want to work with a sense of urgency, but that's when everybody wants to work with this sense of urgency. And they're like, oh, I need to buy now. I need to buy now. When you're in ultra FOMO, right? And everybody and their grandma wants to play the stock market. I'm telling you, that's not the time to work with urgency. That's the one time that if you want to be complacent and you want to chill, that's the one blessing time you get to chill and be complacent if you want, right? But I'm telling you, in these sorts of markets, take advantage of all these dips you get for the rest of this year. Any dip, take advantage, man. Don't be complacent. Work with that sense of urgency, folks. Hope you enjoyed today's video. I appreciate everybody that subscribed to the channel. Tomorrow is the big day. The big day I'm buying stocks in the Patreon portfolio. So if you want access and to support the channel as well and access to see all the moves I'm making in my Patreon portfolio tomorrow, check out the description area. That will have the link so you can join us in Patreon. It is a no-brainer. It's like $2 or $2.50 a week to see exactly what stocks I'm buying and exactly how I'm building up that portfolio, which now I think is, as of tomorrow, will be like $1,000 already, that portfolio. So that is a no-brainer. Definitely join us in there. And also, we got a massive deal coming up, Become a Master Stock Market Dividend Investing Mastery. That'll be on Valentine's Day. And if you want that deal shot to your inbox when it does drop, check out the description area also. The link will be down there. Appreciate everybody. Much love as always, and have a great day.